In your latest note talking about the outlook for Indian equities in 2026, you have said that Indian equities will regain their mojo this year. I'd like to know what makes you so confident.
Okay, so let me just step back a bit and explain why we've had a difficult trailing 12 months. Now, it may not seem so when you look at the Nifty or the Sensex because both have been notching all-time highs. But the fact is that the world around us has been in a ferocious bull market. So if you look at the top 20 markets by, say, market capitalization, India has been the 20th or worst performing market. And everything around India is up between 20 and 70%. So this is staggering amount of underperformance. In fact, in US dollar terms, India has had its worst relative year since 1993. So let's keep that in mind. The absolute level of the Nifty, kind of masks that underperformance that India has suffered. Now, why did that happen? I think the proximate reasons are three. One is coming into the September quarter last year, India started facing a slowdown in its economic growth, which I think was a combination of both tightness by the RBI in terms of policy, rates, liquidity, and regulatory burden on the banking sector, as well as the fact that government expenditure slowed down due to idiosyncratic reasons, elections, heavy rains. So when we arrived in October, India's growth started slowing down. I term it as a mid-cycle growth slowdown. It wasn't the end of the cycle. We had actually done quite well in the preceding 3 or 4 years, and we were experiencing a mid-cycle consolidation. And the other reason was that India's relative valuations versus emerging markets, a cohort that India is usually compared with, were at all-time highs at the end of September last year. So clearly the valuations were not favoring India. We saw some policy pivots in China. And then as we entered into 2026, the world migrated into a massive AI trade. And India is striking for its lack of any direct AI play. So the thing that investors, especially tourist money around the world, wanted to buy was AI. India didn't offer that. So these were the reasons. Now, as we look forward, in fact, India's relative performance is already turned in the month of November. We've beaten the index by about 300 basis points. So we're recouping some of our lost ground. And this has come on the back of a big policy pivot that India itself made, starting in February with rate cuts. Then in April, with both a rate cut as well as a CRR cut, which, by the way, has happened only twice in India's history, once during in the aftermath of the global financial crisis, and then the second time during COVID. April 2025 did not represent any such crisis. So it was quite an exceptional move by the central bank. And the central bank has backed this with massive doses of liquidity, as well as easing of regulatory burden on the banking sector. Now, I may just pause here and tell viewers that India's growth has already started to turn. And if you look at the bank credit growth in the month of October, consumer credit has already accelerated from a low of 7% to near about 17% ex-mortgage. So the policy that the RBI put out already started making its way into the economy. The government has then backed this with a slew of reforms, which I will not recap here because I think everybody knows GST and a lot of other things that are happening. And so I think the growth slowdown is behind us. We're seeing this in real growth data, but frankly, from an equity market standpoint, we need acceleration in nominal growth because that is what earnings depend on. So nominal growth has still not moved, not at least till the end of September quarter. But I reckon as you go into 2026, we're dealing with nominal growth, which will be into double digits, which will then be accompanied by a pretty strong recovery in earnings. I dare say India may actually be the first growth in the world in terms of earnings, let alone GDP growth, which we know India is already the fastest. The second thing is that the valuations have corrected. So if you go to October, because we moved a bit in November, but at the end of October, India's relative valuations were near about all-time lows. So from all-time highs, we've gone down to all-time lows. And while I'm not an expert on global AI trade, I think a lot of it is in the bag. And at the margin, I think that trade is likely to attract less capital, less tourist money. So it's less of a headwind for India. So put all of this together, I think it is looking like a very exciting year for Indian equities.